guys, it's Stock Curry, and in today's video I'm going to catch you up on everything that's moving the markets right now. We're going to talk about earnings, we're going to talk about Elon Musk buying Twitter, and we're going to talk about something else that's coming up that's about to be a major catalyst. So let's get into it! Alright, let's start with the major catalyst that's about to start moving the markets in a big way, and that is COVID. Now, I know we're pretty much just mentally and physically done with this. Nobody wants to talk about it anymore. We're over it. But we have to talk about it because it could potentially move the markets in a major way in the next couple of weeks. And here's why. In the United States, the latest variant, which is BA2, is starting to rise across the US. And it's amazing because this is evident even with less and less people getting COVID tests. Now, this new variant is so contagious that it's actually caused the largest outbreak since the start of the pandemic in Shanghai. That's right, Shanghai has seen more cases from this latest variant than they have at any other point since the pandemic started 2 years ago. Now, as a result, they've shut down the capital, they've been shutting down manufacturing plants, and they've been restricting movement. And the Chinese markets have tanked as a result of all of this. In fact, 2 of Chinese stock markets fell 5%, and the yuan hit its weakest level since November of 2020. Chinese stocks are suffering the worst sell-off in over 2 years. That's right, it's the worst sell-off since March of 2020 for Chinese stocks. Now, so far, the United States is taking a very muted stance on any future COVID outbreaks. However, if this does in fact become as big as it was in China, and the US does see its largest spike in cases that we've ever had since the start of the pandemic, we could see more lockdowns again. And the last time the US cases spiked from Omicron, we saw the stock market go down. It went down quite a bit, entered a correction territory, over a 10% drop. And so it's very possible that as the pandemic cases continue to rise here in the United States, and especially if they start peaking, we could see the market drop another 10% from here just from this one catalyst alone. So you're going to have to keep your eyes on this if you're an investor in the stock market. Even though you may not care personally, this is something we're going to have to watch for the stock market. Now, the next thing we need to talk about is inflation. Obviously, the Fed came out on Thursday last week and said they were essentially going to do a 50 basis point rate hike in May in order to help fight inflation. As you can see here on the CME futures, the market's currently pricing in a 97% chance of a 50 basis point rate hike and only a 3% chance of a 25 basis point rate hike. But the real question that we've always had is inflation affecting earnings? Because last quarter, we just didn't see that. This quarter, we are starting to see inflation affect earnings. And that was extremely evident when Whirlpool reported earnings earlier on Monday. Whirlpool said that consumer appliance demand is slowing, especially in the dishwasher and refrigerator markets, and it cut its sales forecast for the year. Whirlpool further said that industry-wide sales volumes in North America declined 4% across the entire industry. And in giving their forward guidance, they said they now expect the appliance industry in North America will not grow in 2022. Overall, Whirlpool's sales were down 8.2% year over year, and earnings were down 22% year over year. So we're now seeing inflation really starting to hurt earnings, and we're seeing companies losing the pricing power that they spoke so highly of last quarter. And this is really going to be a problem because as the economy starts to slow down due to inflation, earnings are going to start to slow down as well, and that's going to bring the whole stock market down with it. So the next question that we have to really think about and look into is, what about wages? Because wages could save the recession from starting, or at least very much so delay it. However, if wages don't go up fast enough, then that could actually cause the recession to speed up or come a lot sooner than we're expecting. So I was just reading through this article that was released on Monday saying that recruiters are going to extreme lengths to hire new employees, including tripling their salaries, offering big bonuses, as well as on-the-spot offers. Now, that sounds really amazing, and it is. Just keep in mind that these incredible offers are mainly in the higher income brackets, those jobs over six figures. So anybody making over $100,000 a year is kind of falling into this category where the recruiters are offering these big bonuses. There's still an 11 million worker shortage here in the United States with 11 million jobs unfulfilled. But those 11 million jobs are not your low income, sort of minimum wage, $15 an hour jobs. They're really the jobs that are these highly skilled jobs, and we just don't have enough people in the workforce to fill those highly skilled jobs. So it sounds really good, but it's limited to a very small subset of the overall job market. And what we've seen in official wage growth numbers so far is that wages are not keeping up with inflation. So that would point to buying power decreasing and people having less and less money to be able to buy goods and services. That includes everything from gasoline to groceries to just going out and eating dinner. And all of that is going to have a very negative effect on the economy, and it will actually cause the recession to start a lot sooner than expected if this keeps up. Again, there's still a lot of huge unknowns. We cannot predict when a recession will start. You absolutely cannot predict it. When can a recession start? Literally anywhere from the end of this year to the end of 2025. I mean, you literally cannot predict it. So there's people who are guessing all over the place. I think UBS came out earlier and said that they think a recession will start in the fourth quarter of this year and going into the first quarter of next year. Other people think a recession won't start until the third quarter of next year, going into the fourth quarter of next year. But honestly, these are all guesses. We just don't have enough information at this time to really make a good prediction on when a recession might start. But what we do see is that there's definitely a recession on the way. But with us being completely unable to time it, it's really not helpful in predicting the market, because we know the market's going to bottom out when a recession does occur. But if you can't time the recession, you can't time the bottom of the market. So I would ignore it for now, but as we get more information over the next few months, we probably are going to start getting a little bit of a better indicator on when a recession might start. But for now, we just don't have enough information. All right, so we have the upcoming pandemic rise here in the United States, which could cause the markets to go down over the next few weeks. We also have inflation, which is starting to hurt earnings, and that could cause the market to go down. But I think the real question is what's going to happen a little bit shorter term than that. So for that, let's go take a look at the technicals, and then we'll go take a look at some of the earnings that are coming up this week. Okay, so taking a look at the technicals, we'll start with the QQQ, which is a NASDAQ 100 ETF. And as you can see here, it remains completely bearish. I know it was up 1% on Monday, but honestly, that really doesn't mean that much. You're going to have some up days even in an overall downtrend. Right now, this will almost always bounce off of some sort of prior support level, and right now the prior support level was at $317 and around 78 cents. So I would expect the QQQ to drop another 3.7% from here before it bottoms out. Now, what it does after it gets down to that 0% Fibonacci retracement level is anybody's guess. I have no idea if it's going to bounce or continue going lower. Obviously, if it does continue going lower, it will go much lower, but there's also a good chance it could bounce. And a lot of that's just going to come down to earnings, which we'll talk about here in a minute. And taking a look at DIA, which is a Dow Jones ETF, we can see a very similar pattern that we saw in QQQ, where we're still in downtrend, but it's kind of in between these two support and resistance levels here. So there's a good chance the DIA should continue dropping as well. Now, SPY, which is an S&P 500 ETF, is the only one that we see any sort of bullishness on. Though one thing I do see about the SPY is that it actually stayed above the 23.6% Fibonacci retracement level. So it didn't actually fall down as low as QQQ and DIA are. However, if we do look at the MACD and the RSI, those are both still bearish, with both of those continuing to fall. So the candle on SPY is bullish, but the other indicators are all bearish. So overall, SPY is about 80% bearish, 20% bullish. in general, if we look at the market overall, if you consider the QQQ, SPY, and DIA, the general consensus is about 90% bearish, 10% bullish. So there's a very good chance we will continue to drop just based upon the technicals. However, like I said, it all comes down to earnings this week. So let's go take a look at what earnings are coming up. So Tuesday before the open, we do have UPS, and this could be a little bit of a market mover, although I don't think it's going to be too much so, just because of what's happening after the close on Tuesday. But one thing that we can look at UPS is if UPS's revenue or earnings went down, it could be an early indicator that less goods are moving around the country, which means there's less people buying things, which could be an early indicator that earnings across the board are going to start going down because people are buying less goods. So that's one thing we can look out for Tuesday before the open. Now, Tuesday after the close, this is where we get the big ones. We got Microsoft and Alphabet, which is Google. And those are going to be two really, really big ones. Visa is also another one we can look at, which is kind of like UPS, kind of gives a little indicator as far as how much people are buying, whether people are perhaps buying less, and that could be a little bit of an indicator. But really, Microsoft and Alphabet are the two big ones that are really going to move the markets on Wednesday. So really, it's going to come down on Tuesday as to what people do kind of leading into the Microsoft and Alphabet earnings. If people are getting concerned that we might get another drop like we saw on Netflix, for example, they might actually sell out of Microsoft and Alphabet leading into earnings. On the other hand, if people think it's going to be good earnings like Tesla was, they might end up buying Microsoft and Alphabet leading into earnings. So it's really just going to depend upon those two as far as what happens to the markets on Tuesday. Technically, it's bearish, but again, it's really going to come down to earnings this week. Now, Wednesday after the close, we have Meta, which is Facebook, and PayPal, two more big ones, but another huge, huge one is coming up Thursday after the close. Now, like I said before, Twitter before the open really isn't going to matter on Thursday because Elon Musk already put his bid in. We'll talk about that in a minute. But after the close, we have Apple and Amazon. And those are two mega players. Those are absolutely going to move the markets on Friday. Whatever those earnings are, that's how the market's going to move on Friday. So those are the major earnings that we have coming up this week that are going to move the markets. We especially have to keep our eyes on what's going to happen Tuesday after the close and Thursday after the close, since we have all of these mega companies that are reporting earnings this week. This is literally the biggest week for earnings, and it will determine where the markets go. So we're really going to have to watch earnings. Yes, we can look at the technicals, we can make some predictions here, but ultimately it's going to come down to earnings. So keep your eye on earnings this week, especially Tuesday after the close, Thursday after the close. Now what I want to do is I want to talk about Twitter, because obviously we got some major news coming out of Twitter. I don't want to get into all the nitty-gritty details. I'm sure you've already heard it from 100 other YouTubers. What I want to do is just kind of share with you what's going to happen to your stock and your options once this deal does go through, and what you can kind of expect on how the Twitter stock is going to trade for the next few months. So let's talk about that. So, as you've already heard, Twitter accepted Elon Musk's buyout deal, and the price is $54.20 per share. Now, you might notice how TWTR closed on Monday at $51.70, or about 4.6% below where the final deal is going to go through at. Now, the reason for that is whenever there's a buyout offer, there's a certain amount of risk that gets built into the stock in case the deal doesn't go through. And normally that risk is worth about 5%. So the other thing you have to keep in mind is that this deal is going to take months to actually close. It may not close till the end of this year or early next year. A lot of the details still have to be worked out. But the point is, it's going to be a long time before the deal actually closes. TWTR as a stock will continue to trade on the public markets until the deal officially closes. So what happens to the stock for the next 6, 7, 8, 9 months until the deal actually closes? Well, there's a lot that's going to happen. First of all, the share price itself should trade mostly flat. It might go up very little, very slowly, but it will trade mostly flat. The other thing that you have to keep in mind is that there's going to be some shareholder voting. There's going to be lawsuits that are going to contest this. There's a lot of things that have to be looked at and worked through before the deal can be finalized. So they got to work through all the lawsuits that are sure to come up. You got to work through the shareholders that are going to, agree or complain or whatever. And so there's a lot that's going to take place. Now, The other thing that I want to talk about is, as this is all going on, what's going to happen to your options? What's going to happen to your stock? Well, while TWTR continues to trade on the public open markets, you will continue to own and buy and sell shares just like you always normally do. Nothing's going to change there. Now, regarding the shares specifically, when the deal does in fact close and Elon Musk is offering $54.20 a share, you have two options. Either one, you can accept his offer and receive your $54.20 in cash, and that's what 99.99% of people are going to do. Obviously, it makes sense because TWTR will most likely be trading at a discount to the $54.20, and you'll instantly make 3 or 4% profit just by selling your shares to Elon Musk at $54.20. And the other thing to keep in mind is you do have the option of not selling your shares. You can just hold them. Now, if you choose that route, you have to understand that you are now have share ownership of a private company. And when you own shares in a private company, you have very little to no liquidity, meaning it's extremely difficult to actually sell your shares because there's nobody to sell your shares to. So you're not going to be able to trade your shares with your broker. The stock is going to get delisted. It will no longer be on your broker. You'll just own the shares. And then if you want to sell them, you literally have to go find somebody else like me, and probably somebody who's an accredited investor. It can't just be anybody. It's got to be somebody with a certain amount of net income and net worth to actually buy those shares from you. And then you have to manually agree upon a price, and then you have to deliver the shares to them. It's a whole ordeal. It's not like trading on your broker. So just keep in mind that if you choose to hold on to your shares, which I do not recommend, you're not going to get any cash for them, and you're going to have a difficult to impossible time ever selling your shares. So that's why 99.99% of people are going to sell their shares to Elon Musk for $54.20. Okay, the next thing we got to talk about is what happens if you're shorting the stock. Let's say you were shorting TWTR. Well, if you're shorting TWTR, now would be a great time to go ahead and cover that and get rid of it. Because here's what's going to happen. First of all, if you hold on to it, you're going to continue to pay those borrow fees, and you're going to continue to lose money just on the interest from the borrow fees. The other thing is this stock has almost no chance whatsoever of dropping from its current price. It's only going to go up from here very slowly over time as the time value or future value of money starts to go down, and then over time, the share price should very slowly rise. So literally, if you cover today, you're going to cover at the lowest price you probably will ever see TWTR trade at ever again. So now would be the perfect time to go ahead and cover and just take your losses or whatever. The other thing to keep in mind is if you do choose to hold, well, there's one of two scenarios. There's about a 0.1% chance that the deal falls through for some reason, and the stock price tanks and you make a lot of money. There's a 99.9% chance the deal goes through, and in that case, you're going to have your shares recalled, meaning whoever you borrow those shares from are going to want them back so they can sell them to Elon Musk at $54.20. You're going to have to go buy them on the open market for, well, you guessed it, $54.20. So you're going to end up literally covering your position at $54.20 rather than whatever it's currently at, $51 and something. So definitely the best time to cover is now. All right, what about your options? Well, there's a couple of different things that could happen with options, and it just depends upon how they structure the deal. Normally, what'll happen is your options, you'll get a cash payout for whatever the intrinsic value is. Meaning, if you have a, say, $55 option, and Twitter's going to sell to Elon Musk for $54.20, you'll get 80 cents per option. All of the time value is gone. All of the applied volatility is gone. Obviously, options will continue to trade. They'll continue to expire. They'll continue to be exercised, leading right up until the time the company goes public. But when the company goes public, you'll just get your intrinsic value. You will get no value for time or implied volatility or anything else. It's just going to be intrinsic value. And any options out of the money are going to be worth zero. Any options in the money are just worth whatever they're, physically worth. Now, up until then, obviously the options will continue to trade, but the problem is the stock's just not going to move that much. So you're definitely not going to make any money if you try to buy a call option or buy a put option. You're just not, because the stock's not going to move outside of a certain range where that put or call option would actually be profitable. However, you might want to sell options now if you can find a buyer for them. This might be a good time to do an iron condor, a calendar spread, or something that makes money if the stock trades mostly flat. So that might be something you want to consider with the TWTR if you want to trade options. Great time to sell. Just keep in mind it's a terrible time to buy. Okay, so that's everything going on with TWTR, kind of how it works, what you might want to do with it. That's actually going to wrap up today's video. That's everything I wanted to cover. So I wanted to remind you that if you want to know everything I'm buying and selling during this turbulent time, you can come join our VIP Discord. That's over at stockcurry.vip/VIP. And I also wanted to let you know that you have a few days left to sign up for Webull, get their best promotion ever. If you sign up using my link in the description below, you get 5 free stocks worth up to $9,600. That's right, 5 free stocks worth up to $9,600. All you have to do is use my link in the description below to open an account and just deposit $1. And Webull's going to send you 5 free stocks worth up to $9,600. Just keep in mind that that offer does end in a few days, so you need to open that account and get it funded by the end of this month. You only have about 5 days left to actually go do that. So if you're interested in getting those free stocks, make sure you sign up and do that now so that you have enough time to open the account and get it funded and you don't miss out on the offer. Also, I wanted to remind you guys that if you are looking to trade options and they're just not offered where you live, I wanted to remind you that Interactive Brokers does offer options trading throughout the world in over 200 different countries. So if you want to trade options with us, you can sign up for Interactive Brokers, and I got a link for them down in the description as well. I also wanted to remind you that I do have material connections with both Webull and Interactive Brokers. So whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Alright guys, I hope you have a lot of success trading. I did want to remind you to hit the like button and subscribe if you haven't already, and I will see you tomorrow.